Welcome to All Things Moore County, Moore County's weekly radio show, highlighting the many facets of the Sandhills. That includes real estate, lifestyles, community, and neighborhood. And now, from 4 Properties, here's your host, Bill Sahadi.
Our house in the middle of our street.
Good morning and welcome to the talk show, All Things Moore County. Dorothy, about a week away from Masters Weekend.
Is it that close? Wow.
Yeah, and which means another.
Time's flying.
Yeah, but you know what that means. Once the Masters hits the TV station, taxes are due.
Oh yeah, that's right.
April 15th.
Yeah, it's right around the corner, isn't it?
Yeah, corporate taxes, I guess, have already been filed March 15th, and
something like that.
Yeah, everybody
I can't keep up with all that stuff.
Just drive by the post office.
I'm sure it's a zoo.
See the people holding their manila folders last minute, filing.
Yeah, I'm sure.
All the things that happened in spring in Moore County, you can just judge the calendar by the events that are happening.
Yeah.
With that in mind, and we've had a couple of shows recently specifically about real estate, but we're going to meander a little bit out today in financial planning, insurance, health insurance, and we are going to be speaking with the team from Carolina Insurance and Retirement Advisors. Chris Cunningham is with us, and Laura Edmunds and Beth Van Hooser, who none of whom are from Moore County, but they are.
We got a bunch of Northerners in the room again.
Yeah, and they have a sense of humor too.
That's
big
good.
time.
I hear them smiling.
You can see them smiling, right? Even on the radio.
Yes.
We were talking before the show. We're going to touch a lot of bases today. We're going to touch real estate. We're going to talk a lot about health insurance, the kind of services that Carolina Insurance and Retirement Advisors offers to businesses. Health insurance is one of the... Chris, good morning, first of all.
Good morning, Bill.
How are you?
Having us on. Fantastic.
Yeah, Laura, good morning.
Hello.
And Beth, good morning.
Good morning.
Beth, you're from Virginia. Laura, you're from New England?
Yes, Massachusetts.
Massachusetts, that's New England. And it's okay, we're from New Jersey and New York. And Chris, you're from Long Island.
Long Island, New York, that's right.
All right, how did you get down here?
You know, my parents moved down here some 20 years ago.
Okay.
And my father was traveling for work, drove through this area and just loved it. And of course, like many others, was looking for a place to retire and golf.
Right.
And this was it.
And living and paying taxes up in Long Island and Manhattan and New York and New England kind of gets, and Northern Virginia for that matter, kind of gets tired, doesn't it?
Yeah, it does. You know, I visited them and I was hooked 15 years ago.
Right.
So I haven't looked back since.
Right. And Beth, you came here from Virginia.
Yes, sir.
And you're a couple of years out of Lynchburg.
Just finished
college.
up at Lynchburg College.
Congratulations.
Thank you.
And you got down here via social connections. And
Yep. And found myself here at Carolina Insurance and Retirement Advisors, and I was hooked. Haven't left since.
Is that right? And Laura, you were actually with a country club in Cape Cod.
Yes, I was.
Tell me what you were doing up there.
I worked there about 8 years. I actually ended up, started from the bottom, worked my way up. After college, they hired me on full time. I ended up managing there for 3 years.
Okay.
So.
And you got down here how?
My husband's in the military as well. So.
We have so many people. Chris, the demographics here have changed so much since your dad.
Absolutely. And we were talking about this yesterday when I moved down here 15 years ago.
Right.
The Whispering Pines. It was a retirement community.
That's right.
And now it's the school district community. Right. So it's changed quite a lot.
You and I moved down here about the same time. I moved here in '99. Mm-hmm. And you were at the same
2000,
time. Yeah, and you've seen all the changes just
It's
as
incredible. It's incredible.
So tell me, in addition to the fact, we're going to talk later in the show about the fact that you are actually going to be hosting a show on money issues here at WEEB.
Absolutely.
Starting
I'm
in
excited
April.
about that.
Yeah, and you have I can already tell you have a good voice. You're going to be great. You're going to do a weekly show here. And you're going to be talking about covering different types of topics, such as?
Yeah, so we'll be covering all things money, I guess you could say.
Right.
And we'll be having a number of different industry expert type guests on the show.
Right.
But we'll be talking about getting out of debt and the difference between good and bad debt.
Mm-hmm.
We'll be talking about credit and why it's important to have a good credit score, as you know, and how to get a good credit score.
Right. Good and bad debt. That's a topic right there for a radio show.
Yeah.
Just good and bad debt, because we have people today who make decisions that are long term. We have people that make decisions that just seem to be for the present day without a whole lot of vision of the future.
We've seen credit card debt go sky high. I think the numbers these days, it costs over $12,000 is the average credit card debt, and it's hard for people to get themselves out from under that type of debt.
Tell me about the type of client that you service. Runs the gambit of all generations?
It does. It really does. Considering we work with, I'd say probably 3/4 of our work is working through employers, helping employers to help their employees. And, of course, their employees run the gambit of ages.
Right.
And we help employers to reduce and control the cost of their health benefits, which is of tremendous importance. We are seeing everything in this country right now, in my opinion, is being driven by health insurance. Right. We've seen the cost of health insurance increase nationwide by 300% in less than 15 years. Surveys show, employers say the number one issue they're facing is the rising cost of health insurance. It's the second largest business expense, right after payroll. And we see the things that employers are doing to try to manage this expense.
Mm-hmm. We live in a soundbite type world. There's so much information on the internet. There's so much information on TV. I'll submit to you that so many people don't know what to believe or who to trust. Mm-hmm. With the bad discourse in Washington, the politics of Obamacare, the contentious egos that are fighting back and forth. We all have splitting headaches. The statistics that you're just citing, for every statistic that you would cite on one side, you're going to hear somebody say something else. It's confusing.
Yeah. Well, there's no arguing the premiums have gone up.
Right.
And it's not that they've gone up under the, there's been a lot of talk about the new health care law. Mm-hmm. And, while the new health care law has not stopped the premiums from increasing, it's not the cause of the premium increases either. The premiums have been increasing since long before the passage of the new law. And, in fact, that's why they sought to pass the law to control those costs. And while, many disagree with the law and many agree with the law, despite the fact it is, it's a problem. The rising cost of health insurance still remains a problem.
Mm-hmm. Do you find that employers are laying people off as a result of this?
Yes. So what we're seeing, and again, stats out there.
Yeah.
Is we're seeing that employers are shifting from full-time employment to part-time employment.
Right.
They're no longer hiring full-time employees, and the reason why they're doing this is different than what many people think. Mm-hmm. What's happening is employers, in order to not have to discontinue their health plan for their employees, for their loyal employees, mm-hmm. they're cutting hours. Mm-hmm. And they're not taking on new full-time employees so that they can continue to maintain mm-hmm. the health plan.
We've had many different insurance people on. We've had some. Just a few weeks ago, we had some of the the bureaucrats from North Carolina mm-hmm. get covered with a deadline that was February the 15th at that time. Now they've extended that.
Yes and no.
Okay.
that's been a
help me with that.
That's been a little bit of an issue. Yeah. So we had open enrollment for health insurance. Now in the past you could go and get your health insurance at any time. But you have to qualify, or at least was in most states, including North Carolina, you had to actually qualify for your health insurance. You could be turned down.
Right, you could be.
And so under the new law, everybody qualifies, but you have to get your health insurance within a specified time period.
Right. Was the reason that they extended it because of the foul-up in the initial rollout of the plan? And not enough people had signed up? Because North Carolina had a pretty high percentage relative to the rest of the country.
We did. I can tell you we were very busy with enrolling individuals in their health care.
Okay.
And a lot of people walking into our office. But what they did was a lot of people did not realize that they would have to pay a penalty if they did not have the health insurance.
Right.
So what they've come out now and said, all right, well, if you wound up having to pay a penalty in 2014,
right,
well, now you can come back and enroll in coverage, and you have a second chance for enrollment between March 15th and April 30th. However, you had to have paid the penalty.
Right.
And there was a lot of opportunities for getting out of the penalty. So we're actually not finding anyone who qualifies for the second chance enrollment.
Okay.
So there's a lot of people who are coming to us saying, hey, I need to get the health insurance. I heard I can do it now, and they can't.
What do you say to employers? Every employer wants to run efficiently. They want to be as expeditious as they can. They want to cut expenses. They don't want to increase them. How can they do that in the face of the health care premiums that have gone up?
Yeah, that's a great question, and I don't want to come across the wrong way.
Come across the wrong way. It's okay. We can hear it's okay.
Here's what generally happens year after year. Employers get quotes. They'll get quotes from various insurance companies, and oftentimes they'll bounce back and forth between different insurance companies, getting the same old quotes from every broker is going to provide the same quote.
Okay.
That's not what we do.
All right.
We find strategies to help them reduce and control the costs. So, for instance, under the new health care law, employers could actually qualify for a tax credit of up to 50% of what they're paying towards the cost of their health insurance. Less than half of 1% of employers that qualified for this in 2014 took advantage of it because they don't know about it.
They don't know about it.
Yeah, they don't know about it. So it's our job to bring this type of information, and that's not a strategy. That's a tax credit. To take advantage of that, they do have to be on a plan through what they call a SHOP, and here in Moore County, that's going to be Blue Cross Blue Shield.
Okay.
Which is a carrier that we work with, but not every company is going to qualify for that. There's other strategies. So, for instance, through the North Carolina Chamber of Commerce, there's a program again through Blue Cross Blue Shield, where employers can actually put in place a health plan rather than cutting hours, and they can opt to pay for a portion of the lowest cost plan, for instance, that might be available, and then give the employees the option through the North Carolina Chamber of Commerce group exchange to select a better coverage for themselves and their family should they want to, or if they want to select the cheapest coverage so that maybe they can more easily afford to cover their family, that's an option for them. There are the market answers problems, and one answer that we've seen, which is really fantastic, is these new programs that are partially self-funded health plans. In the past, to have a self-insured health plan, typically you're going to have hundreds of employees. Well, now, so what the market has come up with is, and the reason why you'd have hundreds of employees is because the employer could be on the hook for quite a lot of money. Now, with these new health plans, the employer's maximum exposure is their monthly premium. So at the end of the year, if they have a good claims experience, they get a refund.
Right.
And if they don't have, if their claims experience is not as well as projected, or they actually had a bad claims experience, it's not going to hurt them. They might not be able to continue on that plan the following year, but it's not going to actually hurt them. So it's another opportunity. And there's a number of opportunity strategies for employers to be able to take advantage of to reduce and control these costs. And typically we can show an employer a savings of 10 to anywhere up to 50% savings on their health benefits.
Is this geared more towards businesses with a larger amount of employees versus a small business that might have 3 to 10 employees?
Well, some of the strategies are geared towards employers with fewer than 50 employees,
Okay.
and some can be taken advantage of by employers that have more than 50 employees. So the tax credits, for instance, have limitations on employee count and have limitations based on the wages paid to their employees. So there are a number of different things that we have to look at in identifying, what they could potentially qualify for. And it is a somewhat complicated world out there in working with these tax credits and strategies, which is why most employers have not had the opportunity to even hear about them.
Yeah. In Moore County, and Laura and Beth, you've been here long enough you get this. It's a very entrepreneurial type community. A lot of small businesses. We have a couple of large employers, but not a lot of big businesses. So you're working are you working more with mom and pop type business operations as well?
Yeah, our
Yeah, we are actually. For example, we do have. We've been working with quite a few actually businesses in Moore County. For example, there was, just because of the recent health enrollment that we just did, there was a family of 4, and they were paying $1,600 a month just for their health insurance.
Right.
And actually, after meeting with us, sitting down, going through the numbers, they qualified for quite a few subsidies.
Right.
We actually ended up getting their payment down to $290 a month.
For 4?
For four.
But they must have felt like they were taken prior to that.
Yeah.
Goodness,
so
that's
I mean,
an amazing
that's
savings.
just a local business right down the street from us. And
Is that right?
yeah,
Wow, we should talk. Wow, that's great. That's very impressive.
yeah, they were shocked, shocked.
Yeah. Everybody is looking to, when it comes to health care, is to save, not to increase, right?
Yeah, and a lot of the small businesses around here, they think that they are helping their employees by having them on a group insurance.
Right.
But to be honest, a lot of the times they're really not helping them as much as they think they are anymore.
We're going to come back in the second set. We are speaking with the people over at Carolina Insurance and Retirement Advisors. Health insurance is a great topic. We have many others to cover as well. This is All Things Moore County.
In the middle of our street, our house. In the middle of our house, it has a crown.
Welcome back to All Things Moore County. We're talking with Carolina Insurance and Retirement Advisors today. Before we start our conversation, next week on the 11th of April, Chris Cunningham, who is the president of the Carolina Insurance and Retirement Advisors, is actually going to be hosting a show here at WEEB called More Money, the Sandhills news source for financial education. In Beth, in just speaking to Chris in the first segment, I sense he's got 8 parts professor in him, teacher, kind of didactic, likes to communicate, has a very easy way about him. that kind of style is important in the kind of business that you're in.
It's very important, and it's part of the reason why I enjoy working here. Is Chris has really taken Laura and I under his wing to teach us about insurance and teach us about retirement and help us get out in the community and work with people as well. So it's exciting. We're doing a different thing every day, but we're also working towards, our goals and getting things accomplished with our clients.
Yeah. One of the things that is difficult, especially with the younger, like a millennial generation, is to get people thinking about things like insurance, things like investing and planning. I remember in my 20s, my father used to always tell me, and I come from a completely different era, and I thought he was crazy. He would say, just get a good no-load mutual fund, and every week just kick in $50 or $100. And I would go, okay, sure, I thought he was crazy. He couldn't have been more right.
Yeah.
And over time, the way the market had gone, but we lived in a different time, it was sort of like a forced savings and a discipline. But guys, today, there are many people who live either paycheck to paycheck, don't manage themselves well, and they become a product of past indecisions, and then they're scrambling to try to make up lost ground. Do you see that?
Yeah, I mean, the average American is 2 paychecks from broke, so that's...
There's a real positive.
But I know myself, just with the tax season coming by, actually, my husband and I, we actually just opened up our own retirement. I'm only 27, my husband's 26. And it is very important in today's world that you do start in your 20s.
So how do you know that at your age? How do you know that? Because I thought
I think
my
I'm
father
wise
was
for
crazy.
my age.
Huh?
I'm actually an old soul
Yeah, you
living
must
in a
be.
20-year-old body.
Wow.
But yeah, it's really important. I mean, if we don't start doing it now in our 20s, we're not going to have enough money after starting a family and, purchasing a home someday. By my 70s, I'm not going to have enough money when I retire. So it is really important that young people also wake up and kind of start thinking about their future now.
I mean, Lauren and I will both tell you, before we started working here, we had no idea about the things that we really need for our future. Mm-hmm. And these are conversations that millennials like us need to start having with each other and with, someone that can help us work through these things.
So what do you say to a millennial who, if you're sitting down and you are starting in an individual basis about talking about life insurance versus disability insurance? If somebody is in their 20s or their 30s, they're not thinking about death, they're not thinking about the next life. Mm-hmm. Isn't it more, and I'll play devil's advocate, isn't it more important that person insure their disability, be it a permanent disability or one that could lay them up for over 3 months? That's a challenge.
Absolutely.
I mean, it goes without saying that for each person, it's a different route, and that's what we do is we work to find the right route for each individual, or if we're working with a business for each employee. But it is something that you need to start thinking about now, like Laura said, because when the day does come around that something happens or something you need rolls around, you need to be able to dip into those savings.
So some of these topics that we're just talking about in a tangential way are good. You handle a lot of this stuff in a series of workshops. I think you just had one, and you had a ribbon cutting as well last week. You're opening a new location.
Yeah, we've been doing a lot of things, actually. We recently opened our new office in January, and we had a ribbon cutting ceremony on the 2nd of April to celebrate our new location. It's right off Highway 5 in Pinehurst, across the street from the bowling alley.
Oh, no worries. Okay.
And it was awesome. We had a lot of people show up. We had cupcakes, and everyone got to learn a little bit more about our business and what we're doing in that little 2-story building off the railroad.
And this year, in 2015, in addition to the radio show that you're going to be doing, you do a series of workshops. And who is your target audience, Chris?
I'd say it's primarily it's employees through their employer.
Okay.
And we have one workshop coming up here on
April 14th.
Couple
It's
more
a
days.
lunch workshop for business owners, and we're going to be covering new strategies to help them reduce the health benefit costs and show how to implement retirement plans for employees at little to no cost to the employer, depending on what they would like to do.
All right.
And all employers who offer benefits to their employees, we'd love to have them attend. And it's going to be held at Valenti's Restaurant at 2:30 on April 14th.
Valenti's, huh?
Was it 2:30?
12:30, I'm sorry.
12:30.
Say that sounds a little late for
A little
lunch.
late for lunch.
How do you reach your market here in Moore County?
Through a variety of means. Networking, of course.
I
Yeah.
mean, we pound the pavement, actually. We've been going door to
I
door.
bet that the two of you do. Yep.
Yep.
Yes, I mean, we think an old school tactic is the best way. Also, modern as well. You know, Facebook, blogging, Twitter.
She's an old
All of
soul.
that.
You know why? She said something that I completely
Sometimes the
agree
millennials
with.
can bring good things to the table.
There's nothing there. No. She just said something that I completely buy into. There is nothing more effective than eyeball to eyeball marketing.
Absolutely
Exactly.
right. That's never changed.
I mean, I
It never
handwrite
will.
all of my letters that I send.
Right.
Mhm.
Right.
Penmanship
Oh,
to
yeah.
paper.
Yeah.
Use my cursive.
All of our invitations are handwritten by Laura.
So that is a very important. You know, that's not a lost art, but in our age of technology,
Become a
and-
sacred art.
Yeah, it really is.
Yeah.
I'm as a business owner, I am way more compelled by an eyeball to eyeball meeting than I am about an email, a text,
phone call.
or a
Phone
blog
call.
or a
Yeah.
phone call.
Yeah.
Yep.
That's
Same
what
way.
that's what I do almost on a daily basis. Is I'm going out and introducing myself to business owners,
Yeah.
getting them to work with us so we can show them the solutions and the services that we have to offer. And
Yeah.
it's a great strategy, and we've gotten a lot of business that way as well.
And you will continue. I promise you, especially here, you will.
Yeah.
Because people will have a chance. You'll have a chance to hit something on a personal level, eyeball to eyeball.
There's something about putting a face to a name that's very comforting for a lot of people, and especially with a day and age where people are so easily taken advantage of, through email or the phone or something like that. It really helps to know that person and feel comfortable with them, and that's what we strive to
And
do.
know they're local.
Right,
You know,
and
we're here.
we're here. We're right down the street. Our office
You can
is
walk in
open.
the door. You can get us on the phone. We're here.
Yep.
Right. Well, we can ordain you, Beth, and you, Laura, as Moore County residents after 12 months. Chris and I have been here now 15 or 16 years, so we qualify.
Laura
Actually,
does.
I've been here about 3.5 years.
Oh, you
Laura
qualify.
qualifies.
So I kind of feel like I know this community a little bit.
So do you see that in Moore County, what a small world it is?
I mean, I grew up in a small town that was it actually mirrors Moore County itself. So for me, moving out here was very comforting just because it was very similar to what I grew up. The mom and pop businesses, everybody helping each other out in the community, walking through the neighborhood, people waving to you. A lot of areas around here, we've recently, moved into a home in Moore County, but I've been working out here for over a year and a half prior. And that was the big reason to move out here. Like I said, it is comforting. It feels like the home away from home. I mean, it has become my home.
Yeah.
And it isn't, a big thing during the health enrollment period, for example.
Yeah.
A lot of people kept asking, is this just a pop-up office? Are you guys going to be leaving? No. I was like, this is our permanent office. Like, you can come back and ask questions whenever. Like, you can always get us on the phone. We give out, our personal cell phone numbers. We want people to be able, if they have questions, they can always get a hold of someone.
Or if they have a reference. We had a gentleman come in the other day and said, my barber told me to come down and talk to you. And
Really?
we were there. We were here to talk to him. And it's awesome. That's really how we also get a lot of business as well.
So I don't want to embarrass Chris, but I want to ask you both a question. What is it about him that got you guys enrolled?
His knowledge.
Okay.
He knows everything
Okay.
about
Oh boy!
retirement,
Really?
about healthcare.
That's a lot of pressure.
All types of people come in to our office and have 1,010,000 different types of questions, and Chris is always there to either answer it, or if he doesn't know the answer, he gets the answer for you. And it's honest.
Let me just say, if my wife is listening, I see I really do know everything.
But also, Chris is also
Laura?
pretty innovative with the insurance industry. For example, we just went to a conference 2 weeks ago, so we stay up to date with the best products out there in general. So when people come into the office, I mean, we're knowledgeable about recent things, as well as Chris also tends to reinvent the wheel, which isn't a bad thing. It's taking things that have been, centuries,
Right.
Been put into place with insurance, and he's able to find better solutions almost on his own. So it kind of gives him a little bit of a competitive advantage that way.
Sounds to me like Chris is enrolled in trying to help people get from here to there. And if you genuinely service other people, nobody will ever accuse you of selling a product. Because if you are, right?
That's absolutely right.
Right. If people think that they're being sold to, then there's something disingenuous about the presentation. People are transparent, and they don't think they are, but they are. And if you're only focused on the client, and you're only trying to serve that client, whatever happens along the way happens. But your client gets, I think, much more easily enrolled.
Yeah.
That's right.
I agree.
That's right.
We're
That's
also
right.
we learn about the client before we have them learn about us. We want to know what their situation is, what their difficulties have been, and we want to step in and say, okay, we know where you're coming from, and we're here to provide you the solutions to your issues.
That's a big thing, the solutions. We don't come across as pushing products. It's more about, we actually don't really call ourselves an insurance agency. We're more about solutions-based.
Okay.
Every problem, we can find a solution.
Right.
So that's kind of what we drive every day on.
Chris?
Yeah, well, I started in this industry in 1992.
Okay.
I worked for, back in the 90s, two of the largest financial institutions out there, and sold mutual funds and variable annuities and life insurance.
Maybe it was a mutual fund that my father had me kicking $50 a week to.
But it was very product driven.
Yeah.
So, and it was less about, it seemed like it was less about the client and more about, these are the products we're selling, and go find someone to sell it to.
Right.
And that's just wasn't the business that I wanted to be in.
Right.
And so we strive every day to make sure that we're providing a service as opposed to a product.
Right.
And we're affiliated with many different financial institutions, so that at no time are we ever trying to fit a square peg into a round hole. And the very last thing that we'll ever talk about is a product.
I like that analogy. I used to tell my dad when he was telling me about the $50 a month that I could always take a square and fit it through a circle if I just jammed it hard enough. That's what I used to do.
File it down a little bit.
He would just, God, he had so much patience with me. I didn't realize it at the time. We're going to come back in the third set, and we're going to talk about a little bit about your show. Coming up, More Money, the Sandhills new source for financial education. This is All Things Moore County. We'll be right back.
Nothing ever slows her down, and a mess is not allowed. Our house. Our house, it has a crowd. There's always something happening, and it's usually quite loud.
Welcome back to our final segment of All Things Moore County. We just had a fascinating conversation in between breaks. Laura and Beth are definitely old souls. You guys get it. We were talking a little bit about real estate and, asset acquisition, Chris, goes hand in hand with retirement. planning. People throughout their lives make different investments, and you get to coordinate where they are. But a large part of what you do is retirement planning for businesses.
That's right. That's right. And of course, real estate is the largest asset that most people are going to own in their lifetime.
Right.
But what we used to have, and this goes a little bit back before my day, but we used to have was you'd start a job, you'd work there 20 years.
Right.
You get a pension,
right,
and they'd give you a retirement party and a paycheck every month.
Right.
That's not really the case anymore. We shifted from pensions to 401ks, could be just simply because businesses couldn't afford them. Right. Generally these days we see some municipalities and unions will have pension plans. And that's regardless of whether they can afford it or not.
Mm-hmm.
But we see businesses, they could no longer do it. They shifted to 401ks.
Right.
With the 401k, the employer could determine on a year-to-year basis how much money they're going to give their employees. But the 401ks had fees. And what we've seen here lately is kind of the fall of the 401k.
Yeah.
We're seeing less and less businesses with retirement plans. In fact, less than 15% of businesses in the country now have retirement plans. That's a pretty big shift, and it's hard to imagine how people are going to get to retirement when there's no retirement plan to begin with. Of course, Social Security is a mess. Mm-hmm. So what we do. One of the things that we show employers is some new ways that they can look at at retirement planning for their employees. And so for many businesses, if they can't afford they don't want to afford the fees of the 401k, they can do what's called a simple IRA,
right,
which is very simple. The other reason why we see employers discontinuing their retirement plans is the rising cost of health insurance. Everything circles back to that health insurance.
Right.
As employers are having to pay more and more money for the health insurance that they can't afford, they're shifting their attention, their funds away from the retirement plans, and they're saying, hey, we can only do one or the other.
Right.
And then, of course, the terrible returns that people have seen, employees have seen in the last decade or so, have led the 401k to be redubbed the 201k.
And the interest rate environment has been it's
so up and down.
Yeah.
So up and down. What people don't realize, if you have $100,000 in the market today, and the market goes down 50% tomorrow,
right.
Well, now you have $50,000. If the market goes back up 50% the following year, you don't have $100,000. You have $75,000.
Right.
So it takes quite a lot to return from for a market correction. We've seen where the Supreme Court has actually ruled several years ago where employees can now sue their employers, and we see employees suing their employers over returns in their 401ks. So it's become so messy it doesn't make sense for a lot of employers to offer them anymore. So with what we call a simple IRA, which can only be done up to 100 employees, the employer has a little bit more flexibility. What's great is we can put employees into an account that has guarantees. It's actually insured, so that the absolute worst that they can do in a bad year is zero.
Uh-huh.
So we can help them to see a better return and better growth in the long run by avoiding the losses. Now, of course, to have a guarantee, you're going to give something up. So if you're, so let's say you're in an account that's based on or providing a return based on the S&P index, and the market goes up 20%, maybe you only get 10%. So it's going to have caps, it's going to be limitations, but you get growth without the risk of failing. But what the other thing that we show a lot of employers, because a simple IRA it does require a contribution just like the 401k, but it doesn't have fees and it doesn't carry risk. Many employers don't have the money to contribute at all right now. And that's okay. That shouldn't stop them from putting in place a retirement plan.
Okay.
The IRS actually allows for what they call payroll deduct IRAs. So any employer can put in place retirement plans for their employees that the employer has zero fees to administer and does not have to contribute one dime to. And they could do it as a standard IRA, Roth IRA. There's a lot of different options that the employees then have, and it's the employee's option as to whether or not they want to participate, how much money they want to put away. And our job is to come in there and explain to employees what their options are, why it's important to put money away for retirement, and show them how they can do it.
It sounds, I can use a sports analogy. When I was Beth's age or Laura's age, it seemed like the economy had more bench strength than it does today. You're working harder. People have less. There's not as much faith in the institutions. But it's sort of like you're playing with your five best guys. You don't have the substitutes coming in to back you up, to give the other people a breather. You're just you're firing on all 8 cylinders, but you're taxing the system a lot. I don't know. Thank God for sports analogies.
Yeah, you know, as long as the GDP remains down, it's hard to imagine that there's a lot of safety in the market. Right now, the market's at a new high.
Right.
I ask people, what's your plan for when it crashes tomorrow? So, we have to think about that, and we have to be realistic. If we look at what the market does, it goes up and down. It never just continues to go up.
We in our real estate business, we wind up we try very hard to counsel people all the time about how the dynamics of our market has changed. And it has, and it's, some people will always say, well, you're being negative, you're being realistic, it's not just upside. I mean, in our market today, resale is more important than appraised value. 20 years ago, not true, because you could put something in a sign in the yard, the house would sell very quickly. Each year, almost like automatically, the price would go up 3 or 4%.
You could bank on it.
Those days are gone. And so now we have a new reality that we have to deal with. And so we do a lot of explaining to people in hopes of managing their expectations. And I get the sense that that's what you do. And I also get the sense that part of the show that you're going to start airing on April 11th will be to educate and to help people manage their expectations.
Absolutely.
Yeah.
Safety. Making sure we don't build our financial house out of cards.
Right. Because the foundation that we're on is a little bit. There are holes in it right now. But you're right. You look at the stock market; it's at a high. Interest rates are still so low. What happens when rates go up? What happens?
It's hard to say. It's going to be havoc. It's going to be in all industries. It's going to be havoc.
Right. Everything is going to become. Homes will become less affordable. There are lots of dynamics that have to be considered.
People oftentimes think that, well, how bad could it get? How much could it change?
Right.
And if we remember back in the 80s, what was the interest rate? Back in the 80s, what would you have to pay 15, for a mortgage? It was unbelievable,
ridiculous. Yeah.
What if we saw that today?
Right,
everything would come to a screeching halt.
Your show, you're going to have a co-host with you. You'll be doing, is it an hour show?
Yeah, we'll be doing an hour show
on Saturday.
That'll be every Saturday at 12 o'clock.
At 12 noon. Okay, and
then the focus of the show is financial education.
Okay.
All things pertaining to money. Where we're talking about risk, we're talking about credit, we're talking about debt, we're talking about retirement, we're talking about getting the maximum payment out of your Social Security, and we're just coming out of tax time, or wrapping up tax time.
Right.
And, many people are finding themselves in tax situations that that they either didn't need to be in or they didn't realize that they were in.
Right.
We find, Social Security, for instance, was never meant to be taxed. However, depending on your other incomes, you could be taxed up to 85% of your Social Security.
Right.
So, these are things that we talk about. We educate people on how to minimize.
And the estate tax. There's a lot of talk about changes in the estate tax as well.
There is right now the estate tax is a lot higher than it used to be. So it's a lot less conversation about it. But estate tax. Any monies that you wind up passing on to your heirs, you want to minimize the taxes as much as you possibly can.
Right.
And that's another thing that we talk about.
Right. When you talk about money, it's kind of hard not to talk about politics, but you really can't talk about politics. You have to deal, that expression, you have to dance with who brung you.
That's right.
And you have to deal with what you have on the table without letting people go off and pontificating about how they feel about it, because feelings don't relate. This is where we are, this is what we have to deal with today. These are the decisions that have to be made.
That's right.
So
That's right.
You have to balance.
That's right. Same thing with the Affordable Care Act. The people getting health insurance.
Right.
And I'll have someone tell me once in a while, hey, I don't want that Obamacare insurance.
Right.
It's all the same insurance. It's just whether or not you take the tax credit. so and whether you take the tax credit or not, you will pay for it. So you might as well take what you can, and so we show people how to get the maximum that they can from any available tax credits. Mm-hmm. Of course, we're not CPAs, and you'll find CPAs on our show as guests. So we'll have CPAs talking about these tax issues. We'll have tax attorneys talking about trusts. Mm-hmm. And that type of thing. So we'll have experts on to talk about those areas.
Would you consider Carolina Insurance and Retirement Advisors? Would you say that you're a financial advisor versus because there are so many different job descriptions or titles out there?
Yeah. So I tend to not generalize it in quite that way.
Okay.
See, we help employers with their health benefits. We help retirees with their retirement income.
Yeah.
You can call us an advisor. You can call us a consultant. You can call us what you will, but we're solutions providers, and we are here to provide a service rather than offer a product. We don't charge a fee for planning. Mm-hmm. That's not what we do. We're not we're not financial planners. Mm-hmm. But we have relationships with people that we can refer people to if they need something that's outside of our scope.
I see you as an integral part of a team.
That's right.
Attorneys, advisors, retirement, insurance, where every business has access to 3 or 4 different experts. You have your own panel, and I could see you CPAs working in tandem to help your client come to the best solution for them.
That's right.
Not for you.
That's right.
For them.
That's right.
And I completely get that today as we're talking in some of our conversation at the break. Beth and Laura were about people who are out, serving other people for the purpose of serving other people, and then that's the best way to grow, and then to grow your business and your referral base, as opposed to doing things for yourself, right? And to have that distinction where you guys are is you have a jump on generations of people that I know.
Thank you.
You really do. So we're gonna tune in 12 noon starting April the 11th, and hopefully I might even have some people for you.
That'd be great.
We can sit down and hobnob a little bit to get some guests that might be of interest. But let me get from you, Beth, the website. If people want to go or if they want to get in touch with you, let's touch on some of that.
Yeah, our website is www.ciradvisors.com.
Okay.
www.ciradvisors.com. And all of our information's on the website, and you can also send inquiries directly through there.
And you are located on Arnett Street in Aberdeen off Highway 5?
Right off Highway 5, across the street from the bowling alley.
And for businesses, you'll be visiting. They'll get a chance to meet you here shortly.
Yeah, if you haven't already, I'm sure you'll see us sometime in the future. And we also want those businesses.
We'll show at your door.
Yeah, and we also want all those business owners to still feel free to join us for our workshop on this coming Tuesday, April 14th at 12:30 at Valenti's.
Right.
So.
And you'll have other workshops that you'll be advertising on your website?
Yeah, we advertise on the website, sometimes in the newspaper, all the event calendars in Moore County. You can find our information on there.
And we talked a little bit before about the importance of eyeball-to-eyeball marketing, but that doesn't mean we denigrate the positive power of Facebook.
Oh, yeah, we have a Facebook page. Everyone should go and check it out. We post on there regularly. Yep, we're everywhere.
So who's the
starting a blog, too.
Between the two of you, who is a social media guru?
We've actually both have been attributing to the social media, but
okay.
I like the social media aspect.
Okay.
Myself.
Well, don't lose the eye-to-eye, the eyeball-to-eyeball marketing, because that will be your strongest suit for sure.
You'll see us out there. You'll see us.
I'm sure. Chris, it was a pleasure to have you come in, and you're very calming when you speak.
Well, thank you, Bill.
Instant credibility. Is he as calming when he's at the office, or did he just put me on for an hour?
He's authentic.
Huh?
He's authentic.
He's authentic. I think he is too.
He's a talker.
Yeah. You can find out very quickly who's authentic and who's not, right?
I mean, if you ever want to come in and talk to him, he'll talk to you.
Someone has to come and pull me away. Say, all right, you have other things you need to do.
Well, we'll look forward to listening to you, Chris. The show is called More Money, the Sandhills News Source for Financial Education, 12 noon next Saturday.
That's right.
Yeah.
Be there.
Tune in.
Beth Van Hooser, thanks for joining us.
Thanks, Bill.
Laura Edmunds.
Thanks, Bill.
You guys were great. Eye-opening, both of you. I'm very impressed with both of you.
Hope we put some faith back into the millennials for you.
You did. And Chris Cunningham, it was a pleasure. Good luck with the show.
Thank you very much, Bill.
Everybody have a great week. Thank you.
In the middle of our house, it has a crowd. There's always something happening, and it's usually quite loud.